Hi, I'm Katie North, founder and CEO of North Financial Advisors. Today, I want to talk about this idea of making your money work for you. You may have heard financial advisors or people on TV talk about make sure you make your money work for you, but you might not have any clue what that really means in real life. So I want to give you some examples of how to make your money work for you, but also examples of how people don't make their money work for them. So the first concept is about having an emergency fund. Hopefully all of you know that you need to have an emergency fund with 3 to 6 months, maybe even a little bit more, of your expenses covered so that in case of job loss, medical issue, pet issue, major repair to your house or car, you have some cash available so that you don't have to go into debt, right? That seems like a basic concept. But an example of making that work for you would be making sure that money is put into a high yield savings account earning over 2% in interest versus leaving it in your general bank account. It's probably, when you add it all up, your emergency fund is not a small sum of money, but you want to make sure you're at least earning a little bit more in interest than your basic run-of-the-mill savings account. And a high yield savings account is the best way to do that. It's probably going to end up covering your Netflix subscription, maybe a little bit more, but it's better than nothing, right? So that's one basic example. Another one is taking some time to review your investments every single year so that you know not only what you're paying in expense ratios for your investments, but you understand sort of your the different categories of investments that you own in your retirement accounts, as well as the asset allocation and how they've worked together. Right? You definitely need a little bit of everything, but what I see most people doing, absent working with a professional, is they tend to choose whatever their friends picked at work or whatever maybe their parents said to choose. And that doesn't always work out very well because unless you've done some research in this area, you're probably getting it wrong to some degree. So a great way to make your money work for you is actually to spend some time doing a bit more research on this, and it probably doesn't take as much time as you think. Reaching out for help is really a good way also to get the answers that you need. The final way to try to make your money work for you is once you've taken care of your retirement and you're adequately saving for that, once you've taken care of your emergency fund and you've adequately saved enough cash for that, maybe you still have some extra cash flow available from your normal paycheck. It's pretty typical once you reach a certain level of income. So what do you do with that money? At that point, it is time for you to start thinking about building wealth outside of retirement accounts. And you'll want to do that very carefully because at that point, you're going to need to consider what you might need this money for. For a lot of my clients, it's typically a long-term wealth building strategy. And maybe one of the reasons why you want to build wealth is because you want to retire early or because down the line you might want to downshift your role or start a business, right? So in the long run, and when I say long run, I mean more than probably 4 or 5 years from now, we need this money. But in the short run, less than 3 years, we don't need this money. So we don't have to be as concerned with the stock market ups and downs. I wouldn't advise you to invest money that you might need in the short run, right? So once you get to that point, you need to be building wealth and investing. And that means you're going to have to become more savvy at this and learn even more information because investing outside of retirement accounts can start to impact your taxes and all sorts of other things. So there's a lot to learn. And now some examples of ways people don't make their money work for them. The first thing I have to talk about a lot with folks is assuming that investing is some fast and easy, quick way to make money, right? Or seeking out those quick buck type silver bullet sorts of investments. And the truth is that those just don't exist. What you read and what you hear on Jim Cramer Mad Money or any of the major news outlets is primarily focused on people who are kind of the day trader types and who are hopping in and out of investments. And I'm here to tell you that those people don't, on the average, don't probably return all that much in terms of long-term average annual returns. The only way to achieve long-term average annual returns that are listed on any prospectus for any investment is to remain invested in the long run. And I'm here to tell you that investing is typically rather boring. It is not a quick fix. It's not a get-rich-quick scheme. The key determining factors for successful wealth building are 1, your savings rate, and 2, time, the amount of time that you've been invested. So the more you save for the longer amount of time, the more wealth that you're going to build. And it's pretty boring to watch. In fact, I would recommend not watching all that much and just kind of touching base really maybe twice a year, 3 times a year in your investment portfolio. People also neglect to save monthly, right? They live paycheck to paycheck. They allow lifestyle creep to seep into their everyday spending. Anytime they get a raise, they find a way to spend right through it. That's the opposite approach of trying to figure out a way to save monthly and to start building your wealth and increase your savings rate. The other 2 things I'll mention is concentrating your positions, right? So maybe you have company stock offered to you, or you're really intrigued by stock picking individual companies. Well, guess what? Most of the time, any one of these companies could have a PR blunder, a massive failure of a product, and the stock price tanks, right? Anytime you're concentrating a large portion of your wealth and or also relying on that particular company for your income, you are introducing a lot more risk and volatility to your overall wealth building strategy. The final thing I'll say that people don't do often enough is negotiate. So another way to build wealth, of course, is to make sure that you receive a salary commensurate with what you're worth. And for many of us, that means we have to actually negotiate. We have to take some time for that. So I would advise you to look into negotiation strategies. I've got some of those posted on my website. Make sure that you are focused on growing your salary through your prime earning years and beyond, because that is another way of making your money work for you and ensuring that you can build wealth. For more tips like these, visit northfinancialadvisors.com. Our blog has lots of good information, and you can also follow us here